Hey everyone, this episode is brought to you by Sei, the blazing fast parallelized blockchain which is unlocking Solana-like performance for the vast ocean of ETH devs out there. Now, you're going to be hearing all about Sei and their new V2 upgrade, but if you take away one thing, the EVM is here to stay. There are some problems with it, which we're going to get into later in the episode, but Sei, and especially their V2 upgrade, is helping solve that. So thank you very much, Sei, for making this episode possible.
All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. Welcome back to another roundup of Bell Curve. You got Michael's 1 and 2, Vance, all the fellas here. How you guys doing? How's the week?
Week's good.
Big week.
Week's good.
Big week. Soon TM.
Soon. Two weeks TM.
Yeah.
Yep.
Yeah.
Doing well
I
though.
feel like every week there's like a new there's most of the stuff that I've just been seeing is mostly around the political front, which is new for crypto. And yeah, we definitely I went back and looked at what we've been talking about for the last couple of weeks, and it's been honestly a lot of politics stuff. And I know we've got more of that today, but
I mean, it's the X factor right now. It's, stuff is working for people that are paying attention to it. A lot of the people who haven't been paying attention to it don't really kind of get what's going on, or they don't see what's going on. And what they do see is the political winds changing. The 71 Democrats that voted for Fit 21 in the House, the ETF, the ETH ETF, looking like it will be approved here in the next 4 to 6 weeks. Obviously, this runs counter to what happened with SAB 121, but there are a lot of really interesting kind of perspectives that I think people are starting to see from the political winds shifting. And it's not really, I think, now a question of if this is going to happen. It's more just a question of when. So we're happy to talk about it, but there was a new theory that James Seyffert kind of put out, which the rumor last week, at least, was that it was someone in the White House, someone in the Biden camp, kind of gave the nudge to someone at the SEC that it was time to just let the ETH ETF go through. The new theory is that there's someone who, his name is Lizarraga, who's one of the SEC commissioners, who used to be kind of the number two or one of the lieutenants within the Nancy Pelosi camp. And that the new theory is that it was actually someone from the House of Representatives, potentially Nancy, who gave the nudge. And a lot of that stems from probably what people in the House of Representatives, which are much more tied into their constituencies than anybody else. You think about it as the congressional members, then the Senate, and then the White House in terms of ranking level of connected to their constituencies. We've been talking about this for months now. 50, 60 million people in the United States own crypto. This stuff isn't going anywhere. And it's probably going to be the House of Representatives that recognizes this first. And I think that is probably the through line that brought 71 Democrats over for this vote. But it's also now suspected that it's someone who also pushed the ETH ETF. It also lines up with, the veto that Biden made of SAB 121, even though that was also a bipartisan effort within Congress. So a lot of stuff is kind of circulating and churning. And one thing that happened last week, which wasn't published by the time we talked about it, but there was a great debate between Marvin and from Uniswap and Ryan Selkis at Consensus. And it also happened to be about a day before the veto was actually done. But it seems like we're back into crypto, at least for the next 6 months, being a partisan issue, generally, from an election standpoint. And I don't think there's really any debate around that anymore. Maybe eventually we can get to a bipartisan stance, but it is partisan, at least for the next 6 months.
we've also got Iggy Azalea putting the industry on her back. Which is
Iggy.
Yeah, it's funny, it's a little bit of a slow time in the development standpoint of crypto when you've got people either talking about politics or whether or not celebrity scam coins are good or bad, and that's been an enormous amount of the debate this week that I've seen. But I don't know where you guys fall on that particular spectrum, but I'm more of just an enjoyer of the spectacle than really having any hard opinions.
We literally can't even remember what we were talking about like a month ago. So, I'm an observer, enjoyer. I'm not a thread writer.
Nor am I.
I'm not a thread reader either.
Yeah.
But I'm not reading all that.
There's been I don't know if you've seen this guy on Twitter. I guess I'll give a minor shout out here to this guy, Emmanuel Awosika. Awosika. Have you seen this guy? He's a technical writer for the EF and has been writing these like massive threads. He has a very pointed perspective on Ethereum and what the L1 should be doing versus the rollups. But I don't know if this is just my feed or if you guys are seeing him everywhere also. But
I mean, people can't stop talking about Ethereum.
No.
It's really hard for them to not talk about it. But, there's all these things happening and all this amazing, application development. But coming back to ETH all the time. No press is bad press.
Agreed. All right, I've got a question for you guys on that. So we have the announcement that we're getting Ethereum ETFs. We don't really know the timeline. Gary Gensler came on this week, and he basically the TLDR was that he tried to calm people down, said we're going to be thoughtful about this, and tried to send the expectation that we're not approving in the immediate future. But
hey, what the fuck?
Come on, Gary. Yeah.
Love his CNBC appearances.
Yeah, that's just Gary being Gary at this point. But what do you guys think? Like putting yourself from the perspective of a trader, do you think that ETH performs similarly to what when the market kind of woke up and realized that Bitcoin ETFs were going to happen and there was sort of a grind up? Or do you think that people won't really be incentivized to front run until we have a hard date on the ETFs? And whenever we get that, then people are going to start really piling in. What do you guys think about relative performance there? It doesn't really matter at the end of the day, but
I mean, the biggest price action happened after the launch.
Right.
So with Bitcoin ETFs. So, January 9th or 10th, I think was the date that they officially launched. And then it took a little while. Like the biggest price action happens in the later half of January, and February was up only.
Chart looks great. The the long-term chart, if you want to throw this up maybe. So it's already re-rated, it's like, 0.54 ETH BTC. And this is the setup that you want, right? You want like the super robust BTC flows with the positive price action, with macro easing, with, weaker jobs, with central banks cutting rates, with all the tokenization and adoption narratives that are happening on ETH. And I think you can kind of see it as well with like Sol ETH and that starting to kind of maybe just plateau. And maybe that's like a permanently higher plateau, but a lot of the market's attention has shifted to ETH. And I think if these flows are any fraction of the Bitcoin flows, which I think there's a case where the ETH flows are going to be higher than the Bitcoin flows, like you'll probably see a few days where it's like ETH and Bitcoin have roughly similar flows. That just means so much more to an asset like ETH. And I was looking at this on Twitter the other day. The lowest amount of ETH on exchanges since September 2015.
Wow.
And I think that it kind of reminds me of like the ICO bubble when everyone was taking ETH off of exchanges. And it's like, you look at the ETH, like supply and exchange charts, like September 2015, then the very kind of like start of the ICO bubble. And then now, but if you don't have a ton of these coins, like people are trying to like put them in these ETFs where they generally don't leave. I don't know. It's funny to like look into crypto Twitter just tearing itself apart, and then you kind of zoom out and look at like the long term of these charts and the long term of like the supply dynamics, and it feels like it's going to be a fun summer. So
I mean, the other data points that I think are interesting with Bitcoin relative to ETH. And, think about all the different places that ETH is currently stashed right now. You've got obviously all the staking capabilities, but, in addition to the staked ETH, you've got ETH and generally it's double counted in that respect. But 20 billion is now an Eigenlayer. You've got hundreds of millions, if not, I know Karak just announced $1 billion in their private testnet. You've got all the ETH that's locked up in Maker. You've got all the different use cases of ETH as collateral with it in and throughout DeFi. Like there is not really the same supply demand dynamics. Even if the demand is lower, the supply dynamics are not there. The biggest catalyst for less supply was a couple months later, 3 months later, with the halvening. That's now in, and so we're seeing the ramifications of that, and that's why you saw nearly $1 billion of inflows yesterday, or 2 days ago, and I think it was like 600-700 million yesterday. Like these are massive numbers from from a Bitcoin ETF perspective. The other thing that I think is going to be really interesting that happened with Bitcoin was Bitcoin had an up only month in February, but the other asset that also had an up only month was ETH. And it was riding the Bitcoin wave. The thing that I think will start to happen is you'll have ETH actually drive a lot of the price action in Bitcoin, which will be one of the first times that you see that, because the attention, the flows will all be on Ethereum as it's going into that ETF for the first few months. And then we'll see where it net settles. But I think you're going to see a kind of a narrative shift where Bitcoin will ride ETH for a while. And then the other thing that I've seen this week, 900 million, 500 million last 2 days. Also 30 million going into GBTC, and then 15 million going into
who are these people?
Someone must be fat fingering something.
Let me put a take that I saw out there that I thought was really good. So, Split Capital, 900 million in inflows were required to keep ETH BTC flat. That's going to trigger some people if they can read. But like, it is remarkable that ETH BTC is hanging in there. It's kind of remarkable that the alts are their alts are getting absolutely slaughtered against Bitcoin and ETH, but the fact that they're hanging in there, a lot of, I forget who asked us this, but someone was like, when are the alts going to pump like they did in 2021? And it's like, well, it's like kind of a different cycle. The capital's more siloed. It's not like the ETF buyers are like going to rotate into altcoins. Like they're not in the same ballpark. Like they're like off in Morgan Stanley, prime brokerages. They're not like rotating into altcoins. But I think what could happen is that the majors run so hard, like Bitcoin over 100K, ETH over 6K, 7K, whatever, that that would be the level of wealth required to generate like this altcoin rotation like you saw in 2021. Like I do think it is coming. I just think the majors need to be they just need to be a lot higher priced for that to happen. So I think that's your bull case.
We're just too early in the cycle, to your point. Like, when are the altcoin runs from 2021 happening? How about in 2025? Because that's the time frame that would be equivalent. Like, where everybody's like, oh, is the bull market over in March? Nope, it's still going. Oh, it just started. I can't remember who had this discussion, but what inning are we in of the cycle? And it's got to be in the first 1, 2, maybe the bottom of the second right now. But that's like the max that we're in terms of where we are. We just discovered what the new game is, which is institutional flows. The game has started. We've played 1 inning. The second inning is about to start with Ethereum. The other thing too that I will say is I continue to see this, and we've chased this down in multiple different directions, but the advent of a third ETF is a long ways away. And what will actually have to happen is things will have to be declared commodities. I don't know how many times we have to say this, but Brad Garlinghouse suggesting that in 2025 there's going to be an XRP ETF. There's still an ongoing lawsuit with the SEC, Brad.
The garlic man, garlic bread,
and
he's just doing his thing. He's like, it's coming.
I am 100% in support and agreeing that there will be these ETFs. But what we have been shown so far is that there is a standard process now for how these things become ETFs. Step 1, declared commodity. Step 2, a futures market on a regulated exchange like the CME. Then wait 2 years, have enough correlation data, and then file the applications. But anything other than that, maybe that changes with a new administration. But you're you're hoping for a change as opposed to you're playing for a strategy.
So I think that is the biggest difference that could be expected between a Democratic versus a GOP administration, like a Trump versus Biden administration. It's like whatever, if Trump ends up following through on all these promises, hey, I love crypto in all these different forms, and my NFT collection is sick, and I'm going to make crypto the US the center for crypto again. That's one of the points that he could attack and say, hey, people generally love the ETFs. CME is throttling the ability to expand into other products, and like Coinbase is trying to launch their own sort of regulated futures exchange as well. And there's no real reason why they couldn't just look at the Coinbase.
It's not like, so it's not like we get a new president in the White House on November 6th or January 20th, and suddenly like, all right, clean slate, let's wash it all off and like rebuild it back up. It's you got to go through the right proper channels. I mean, this stuff will take some time. That's kind of generally my only point.
Hey everyone, wanted to give a big shout out to today's title sponsor, Sei. Now, I want to talk to you guys a little bit about why I think Sei is cool from a design standpoint, a big problem that it solves for ETH devs out there, and then some cool stuff that Sei has coming up. The reason I like Sei from an architecture perspective is, again, it's a very fast blockchain, parallelization, all of that stuff, but Sei has essentially been custom building block space, which is for consumer apps and dexes. Now, they have some very cool features which enable that. So twin turbo consensus, optimistic parallelization, Sei DB, all of this stuff allows you to reduce the time to finality, make for very, very fast transactions. So if you're building a consumer app or a DEX, this is basically the blockchain for you. If you've been building in the EVM, you love the EVM, but there are some restrictions about it that don't support your app. So maybe you can't do fast enough transactions, or it's not parallelized, whatever it is, you can now take all of that stuff that you built. You don't have to start from scratch, and you can build it on Sei. Now, recently they've launched V2, but also public devnet. So the way that you can follow that and keep up to date is go and follow Sei Network on Twitter. All right. Thanks, guys. Wanted to get your guys' take. Well, why do you think also, I guess one final point, we haven't made this a macro podcast in a while, but those are pretty monster inflows for Bitcoin this week. And I think probably you could look at this sort of growing slowdown in growth as pointing to the reason why that might be. Expectations around rate cuts are starting to shift. People are pricing in one more this year, 3 instead of 2. The expectation, the sort of whisper is that people are expecting a dovish FOMCs in both June and July. And yeah, the ECB and the Bank of Canada both cut rates this week. So I think people are generally starting to see the direction of rates move in the other direction, which is taking longer than almost everyone thought. But
this is what we play for. This is going to be the largest rate cutting cycle of our lifetime. I don't think rates ever get to 5.5 or whatever they're at today. And we'll see where they take them. But this is going to be the biggest rate cut cycle of our lifetime. This is what we play for. I don't know how people are bearish right now. Also, I listened to a ridiculous macro pod with Jeffrey Gundlach, who is the CEO of DoubleLine, which is this mutual fund. I love him, but he's completely lost the plot. He's like my new thing is that he's so bearish that he's buying 0 coupon U.S. Treasury bonds because he thinks that the U.S. government is going to have to restructure its debt. And the 0 coupon bonds are like the senior part of the U.S. Treasury capital structure. I was on a walk and I was listening to this. I was like, these people have lost their goddamn minds. Like, you literally just need to buy these coins. That's all you need to do. And just sit there.
Well, I mean, let's play it out. So like, you're at 5.25 right now, no more rate hikes. Let's say, 1 to 2, maybe 3, 25 basis point cuts this year, maybe another 100 basis points of cuts next year. I mean, I don't know if this is what you mean, but like, I don't actually see us getting well below 2.5% in terms of interest rates. We're not going back to ZERP. Like, that's not going to happen. What that does though,
I think we could get close. We could probably go to 1 in the right economic scenario, but
it would have to be bad though.
Who knows? Like, my point is, like, when they start cutting rates, people are going to price in like all of the rate cuts at the first. It's like they cut 25 basis points. Well, let's price in 250 basis points of cuts. And I really don't think you need to get more intellectual than that. Just like the price of money is going down, the price of assets are probably going to go up.
There's a really excellent clip. I can link it in the show notes here. We just brought on some Felix Joven, who's starting to be more active on the margin. He quoted this. There's a guy, Warren Pies, who it was like a 2-minute clip. We can share it in the show notes here. And he talks about the sort of doomerism that runs rampant, especially on the macro side of things. And he's like, look, I was one of these guys in 2008. I thought the world was ending, moving all into gold, blah blah blah. And that's just not the right way to make money. And he actually used specifically the example of like Stan Druckenmiller, who he's been making the rounds and saying, look, I'm really concerned about the US fiscal situation. These things are, and doing the same sort of historical, there's a huge problem here. But then you look at the way that he's investing, he's buying Nvidia. Like look at what these guys say and what they do. And yeah, because he's a guy who has to make money in the markets. And yeah, just don't get like infected by this doomerism, the world is ending type thing.
I mean, there's a lot of takes like that, but I remember Jack Farley, that dinner we had with him, and he was like, my bearish videos get 5 times more views than my bullish videos. Yeah. And there's always a market, like even since like Nostradamus, for like these like doomsayer calls. Like this is like not a recent thing. And there's so few just consistently bullish people that like my macro diet in like 2022, 2023 was like all these macro Substacks, podcasts, very bearish, very doomerish. And then I had Tom Lee, email newsletter, who's just like, buy dips, stay bullish, stay in the game, keep going. It's like that. And it's like not as intellectually intriguing as the doomsayer, kind of perspective, but Tom Lee is like the only person who's been right over the past 10 years consistently. And he's gotten absolutely shellacked when he's wrong. But you're going to be wrong at least part of the time. So why not be bullish for the other part? It's just a much better strategy.
So I've got a buddy who his dad runs the largest bond fund at Fidelity. So 100 billion plus in bonds.
I bet he's pretty bearish.
So I actually remember it was December 2022, and I was around his place around Christmas, and I asked him, I was like, hey man, because I same diet, right? Like listen to a bunch of this doomer stuff, right? Remember 2022 was a horrible year for everything. Everything was way down like 30%. And, I don't even remember what the narrative was back at that point. It was something about how QT was going to bet like something bad, right? And I was like, is it going to keep going down? Like it has to keep going down. And I asked him, I was like, so what do you think about this? And he said, NASDAQ's down 30%. It's almost never down 30%. You should probably buy it. And I was like, dude, no, that's way too simple.
Dude, you don't need the heuristics that are like mental gymnastic. Like you just need to stay bullish. Like they're only going to put more money. Yeah, it's. I think it's like the other thing I've noticed now is that I've noticed that TradFi people are more bullish on crypto than crypto people, and I would say the right crypto people are more bullish than TradFi people. But like, you kind of do have this like passing of the torch of people who can see the long term of the market, crypto markets and general markets versus crypto people who are. I don't know. It feels like some of them are burnt out. Some of them are like struggling to figure out like, okay, if I'm like a, DeFi guy, do I have to get into games? Do I have to get into meme coins? Like, but it's kind of fitting because TradFi is going to take most of the ride in terms of market cap for the crypto industry, which is pretty tragic if you think about like, the people selling their coins to bankers meme.
It's pretty interesting. So I've always had this thought around different mentalities when it comes to investment strategy. And if you're an eternal optimist, like I think most of us are, or at least definitely the 3 of us are, you only have to be right, 1 out of, 3 times, 4 times. If you have a venture fund, you're going to be wrong more than you're right. And that's just the nature of the game. But if you're a TradFi person, you can be correct in terms of your investment strategy, predicting 2 out of the last or predicting 5 out of the last 2 recessions. And so it's the same kind of thing where you just have to be right a couple of times, even if you said it 4 times that and predicted 4 times that. If you do risk management properly, it's a very different mentality. And so that's why, I'm sure it's all the people who look at the Jack Farley negative discussions and it's like catnip. Oh, great. Here comes another one. I'm going to regurgitate this and send it out to my LPs. It's like, it doesn't really make sense. And I think there's just 2 mental models and the 2 are just fundamentally different. And you're either an optimist or you're kind of a realist. And if you're a realist, you have a different strategy than an optimist.
Yeah. And I think Jack does a really, like, Jack produces great content and does a really good job
Totally
of pushing back on those people.
Just referencing Jack's
Right.
content because we've talked about it.
There is a pervasive bias in it's actually a human nature problem. It's not just a finance media problem. Just look at the news and how negative it is. Look at the ratio of negative to positive stories on the news. This is a human nature problem that's not super fixable. For whatever reason, people just choose to consume more negative than positive content. It gets your amygdala firing, and that's just. I'm not really sure that you can. Yeah,
medulla oblongata.
The medulla oblongata.
But in the same way that you have the hero movies, like, you know, the venture investors in The Social Network, you also have the people in The Big Short. And like, that's the two mental models of, you know, how to operate. It's like you're either hitting a Facebook or you're predicting a housing crisis.
The big long, how Michael and I
the big long.
How Michael and I sat on our hands for 5 years and absolutely killed it.
You know what I also don't understand about the people who are like, the U.S. is going to have to restructure its debt and it's going to.
We got bigger problems if that happens. Also,
like, that's what.
Don't worry, you're going to be senior in the capital stack. Like,
yeah,
we were talking to an LP this week, and it was pretty funny. It was like, you know, why are you guys like doing all this stuff in 2022 and like, you know, getting long, getting like it was not your, but it was like not a typical year. And he was like, yeah, you know, we were invested in a couple managers who in like 2008, 2009, they were like looking at these distressed debt offerings that were 4 cents on the dollar. They're like, look, we're going to buy as much of this as we can because either, you know, the financial world is ending as we know it, or these things are going back to par. And those are our two options. So might as well be buying.
This is the old Wall Street saying, you never bet on the end of the world because it only happens once, which is really true, you know.
I like that.
But also there is, I feel like we are in, well, I don't want to spec, this is outside of my wheelhouse and everything, but I feel like we are in the end game of this there is a restructuring going on. We're inflating the debt away. We're in the long, slow process of inflating the debt away. That's what's happening.
Yeah.
So
I don't think we're at the end of it though.
No, definitely not. Definitely not. And it's not going to be super fun. Probably there's definitely, you know, consequences to that happening. So, because sometimes I think people just say, "Oh, that's what's going to happen. It's going to be great." It's like I don't know about that either. But
nope.
Yeah. I mean, like, it just feels like if this is really going to happen, like this inflation, restructuring, recession, we take money cost back down to zero or close to it, like. This is the Overton window for crypto to really work.
Yeah.
Like, this is the Overton window for Bitcoin to actually hit 500K to $1 million. You know, gold goes up, you know, all the other crypto assets go up. Like, it just feels like some people have been in crypto for so long now that they're like, they just need a little bit of like an energy drink to keep going. So,
also, just given the amount of negativity, just look at the price chart of Bitcoin since March. It's just ranging. It's like, if it's not going up, everyone's miserable. It's like it is ranging at all-time highs. There's not that much to be upset about.
But also look at funding rates and RSI over that same period of time. It's quiet. It is ranging at all-time highs, but it is quiet.
Damn, I didn't know you were looking at RSI, Michael. How are we looking? Are we oversold on the RSI?
Day trader Michael, baby.
We're not oversold.
All right. Let's zoom in. I've got something I'd love to get your guys' opinion on, and I think it went a little bit under discussed this week because it wasn't a huge story, but it made me think. So Starkware announced that they're raising $1 million to scale Bitcoin with zero knowledge proofs. So obviously, super cool initiative from Starkware. It's not super influential right now because, you know, there's a really long timeline around this, and they're raising $1 million. But the idea is that you know, the technical structure that's going to support rollups on Bitcoin, you know, if that ends up becoming successful, is ZK based. And that's based on the reintroduction of this old opcode on Bitcoin, which is OPCAT, or OPCAT. And it is pretty interesting. Like I hadn't really thought about this, but it is kind of a match made in heaven actually for some of these ZK rollups on Ethereum, especially ones that might be struggling to attract TVL or volume or compete with Optimism, Arbitrum, or whatever, to take a look at Bitcoin. And like I'll kind of lay out the reasons I think it might make sense, and then the reasons why I think it'll be an uphill battle for the Starkwares of Matter Labs of the world to do this. Like the pros is that, okay, if you already have a lead on ZK Tech, then it makes a lot of sense for you to leverage that into going onto Bitcoin as well. There's sort of a track record of this working a little bit with NFT platforms like Magic Eden that pivoted over to Bitcoin. Not one-to-one the same thing at all, but like, that huge crypto native store of wealth of Bitcoin has worked for infrastructure plays that began on different platforms. And I would have to imagine between like Polygon, Matter Labs, and Starkware that they have the majority of the ZK talent in the space. And maybe they could outcompete some of the new teams on Bitcoin that are trying to spin up L2s. The counter argument to this is that one, still a really long ways away. So you got the Bitcoin teams have a huge amount of runway. Two, they've got this new chain like airdrop incentives. They're ecosystem specific. They're leaner and meaner teams probably than some of the big L2s on Ethereum. So you've kind of got that going for it. But what do you guys think about this idea of A, some of the rollups going more multi-chain, and then B, sort of the intersection between the ZK rollups on Ethereum and Bitcoin L2s?
I think this accelerates just the end game of separating the asset from its consensus layer and thinking around what restaking means and why people would be attracted to one blockchain or the other. Spoiler alert, it's not its TPS, or it's not its virtual machine either. Nobody gives a shit about that. You can make the argument that it's the UX slightly, but I think it's more so the use of the asset as money and its community. And we've talked about this. And like, if you speed run the ETH roadmap and you get to a much worse version of ETH in a much shorter period of time at the end game of it, that's not bullish for your ecosystem. And so like, I think it's not like Bitcoin, and it's not up to like the Bitcoin core devs, but like there's no, it's not like a riskless path to say like, okay, we're going to build all these L2s. We're going to try to build a DeFi ecosystem, blah, blah, blah. Because if it doesn't pan out and it just looks worse than ETH, then you kind of have this new vector of competition for those two to compete against each other. And then there's all these other interesting conclusions, which are like, can you secure a blockchain with a meme coin? Like, could you secure it with Mother? Obviously, Mother doesn't have a consensus mechanism, but like you can bootstrap one into it via something like a Carrack or like a restaking protocol. So that's kind of my overall take on it. But I think it's like the more these ecosystems run towards ETH's roadmap, it's like there is a risk that they don't pull it off and ETH just looks way better by comparison. Well, last thing I'll say is on Solana, like this is kind of similar thing. I think the Solana community kind of misunderstands its success in some ways. I think they believe it's because of the UX and TPS. I actually don't think that's the case. I think it's the community. Like they have a really stellar community forged in the fires of an exchange collapse and the subsequent rebound and the blah 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 and the meme coins. But like, would I rather have the best community or the best tech? I'd much rather have the best community.
10 times over.
For sure. I also think I have a pretty left curve explanation also for why Solana has done well, which is that there actually aren't that many tokens to choose from. Like if you want exposure to that ecosystem, it's like Sol is definitely the best bet. Jito as well, JT, like just because of the broad amount that they do in that ecosystem now. But Ethereum, you have all of these different choices for this L2 or that L2 or apps or whatever. I think that's coming for every single blockchain as well, or every single L1, by the way. But I think that's also part of
if you modularize in certain ways, you abstract certain values into other asset categories or other assets themselves. So I agree with both takes. I think as we start to get closer and closer to the ETH final roadmap, there's an interesting perspective on the Bitcoin side of things, which is like, why was it that such a fervor around Bitcoin L2s and Bitcoin activity happened, Bitcoin restaking happened from a fundraising perspective post Grayscale lawsuit conclusion, pre any other ETH ETF type asset launching. It's because there was still this, even in like 0.1% chance that Bitcoin was going to become the only dominant commodity and platform that existed in crypto that's now been de-risked. But there's an interesting theory around the excitement around Bitcoin based off of the excitement around the Bitcoin ETF being launched that drove a lot of venture investing into this category. I think it remains to be seen. We haven't even seen any of these things launch. Like we have no idea, whether or not, there's going to be a Bitcoin L2 or a Bitcoin restaking protocol. I mean, we have heard, and we obviously have backed Babylon. There's a lot of people that are interested in using Bitcoin as an asset within a restaking protocol. But I think of that as being fundamentally different from a consensus protocol that has Bitcoin as the mechanism of the asset.
I have a question for you guys on so do you guys remember back in like 2020 and 2021 where everyone was just trying to launch like the equivalent of Uniswap and Aave on different chains? So it's like, hey, look at the success that Uniswap had and Aave had. Let's go run that trade back on Solana and Avalanche and whatever.
It's like Uber, but for cats.
Right, exactly. So then I look at these very core infrastructure components for different L1s, like liquid staking, restaking, rollups, and it's kind of following a somewhat similar pattern. It's like, and there are better reasons for it, I think, this time, because a lot of that is core infrastructure to the protocol. But it's like, okay, we've got EigenLayer for Ethereum, we're gonna have Jito for Solana on the restaking front, or whatever. Karak is probably a notable exception to this case. Rollups are like ETH specific rollups. There are a couple of Solana L2s, and they're going to be Bitcoin L2s. And it sort of feels like Lido is for ETH and Jito is for Solana, whatever. And it feels like none of these applications or infrastructure sort of plays have crossed the chasm. It's like okay, this is the Ethereum version, the Solana version, or maybe the Bitcoin or Celestia version. Do you think that's the end? There are really good reasons for that. We've talked about it on this podcast before. But do you see that as the end game, or do you see eventually, like rollups, it makes sense to me that there should be, rollups should settle to multiple different L1s, I would think. But how do you guys see that playing out in the long run?
Kind of like, who cares?
Yeah.
Like where they settle to. What matters is what asset are people holding and transacting with. Like, assume that all this stuff users will never know nor care. And you can think about restaking as basically like M&A. So like all the protocols that are too small to generate revenue on their own, oracles, ZK proofs, maybe even bridges. I would say chain abstraction probably has a big enough shot that it can be separate, but like all those will fold into things that are validated by native assets. And like the communities that form around these native assets, Sol or Bitcoin or ETH, like those will be the people who are like, I'm staking my ETH and I'm getting fees from all these different things. And I don't care where these rollups settle. That's like not my problem. Like that's right. Like the developer of the app. And the developer of the app, like what are they going to buy us for? Probably cost on the DA layer. But like really what they're going to buy us for is like, I need to create real big economic value in a digital economy. And I can't really do that with USDC. I need like, Sol paired with a meme coin. I need ETH that's been restaked paired with some other asset. Like that's what they're concerned about. And it's just it like doesn't really like matter what it settles to at the end of the day. In our view, it's like you can think of the valuation of a crypto asset as, okay, what's its fee component? What's its monetary premium component? And I think we're going to go into an era where the monetary premium is like by far and away the most important thing. The fees they'll come and go. Like I think we're at the very beginning of like where fees are going to go over the long term. And there will be like the J curve. It'll be up and down, like some days it'll be super high fees for Ethereum. Some days it'll be super low. But the thing that matters is like, do people know that they're holding ETH? Do people care? Do people, use it as money? That's like the most important thing. And I think that's frankly where Bitcoin is going to have a tough time. There's just not enough people who are willing to use it and hold it and borrow against it and denominate in it versus ETH. And I think Sol is just starting out on this path. Like we kind of don't know, like the Jito and Phantom partnership came out today. We should talk about that. But like, in my view, that's kind of like, you look at the Jito Sol chart, it's just like going up. The DeFi side of Solana needs stablecoins basically. And it needs like probably better reliability on, I mean, I've fucked around with like Camino, but like there's still some stuff that's a little bit sketchy versus ETH. But like that's what Solana needs. Solana doesn't need it does need restaking in some ways, but like it needs like the base level primitives first to get going. And Bitcoin, I think, is like kind of in that same journey of getting those base level primitives going. But the prognosis, I think, is like worse than Sol for it to be used as money. Because at least you have like this new community in Sol that's actually using it as money. Bitcoin, it's like, how do we get these boomers to like start using it? It's a much different battle, much more uphill.
I've struggled to develop like a really strong thesis around like Bitcoin DeFi. It feels contrary to what has been drilled into you as a Bitcoin holder forever. I've got my forever bag, don't do anything with it, cold storage. I want to be buried with my Bitcoin, and that would be a good life. Life well lived.
Mike, you can't take it with you.
Yeah. Well, tell them that. So yeah, I think I agree. I think that's a challenge. I'm just interested to see when some of these infrastructure plays start to be cross chain. Like there are like borrow lend is another good example of that. There's the technical challenges of real genuine cross chain borrow lend is just tough because you have to take bridge risk. So there are these technical reasons for it not happening, but at the end of the day, to your point, people don't give a shit what chain you're on. Like people just want to borrow lend. So maybe when most of the usage moves these L2s and L2s start to be settled to multiple different L1s, like maybe just Aave's activity ends up there. I don't know, but
I mean, here's the thing: it's not going to be the same etymology as the internet had. But one thing that also happened this week was the Coinbase Smart Wallet launch or relaunch. This is now like a user ID password with like a passkey 2FA. It's got all the bells and whistles that you would expect coming out of Coinbase. This is probably the closest thing that we've seen so far to a browser on Web3 in a lot of ways. And I know a ton of people have tried to create like the browser for Web3. There's no one that's really had the success of being able to have tens of millions of active customers who are buying crypto assets. And now you have an interface that's trusted, secured, to be able to interact with Web3. So let's just assume that that's the front end. On the back end, we're kind of in that like 90s phase of building out all the networking components, the Juniper networks, the infrastructure, the Cisco, and even down to like who is actually the one serving this stuff. So like the data centers and like all of that infrastructure has to be built out. I consider that to be a lot of the conversations that we're having around what are the execution engines, what are the consensus layers, what are the settlement layers, what are the cross-chain abstraction layers? Like all of those things are kind of the middleware that enables better and better and easier use cases for internet services. The difference here is that, to Vance's point, there is an element of what asset are you using to use those to consume those internet services. That's where you can cross the chasm. And ultimately, it won't matter whether or not you're spending a little bit of ETH or a little bit of ETH is being spent on your behalf to go interface with Aave. And it's settling to on Optimism, but it's, Celestia back in DA, and like, it doesn't matter because, all you care about is what asset do you have and what asset are you using. Ultimately, we have to kind of like fast forward a few years and, maybe squint a little bit, but let's assume that the Coinbase wallet becomes more and more, or applications like it become more and more like the browser, maybe the Netscape equivalent. All of this infrastructure, all of these layers will get more and more abstracted. And no one will even know what they're transacting on, what they're using. They'll say, hey, what about this like Solana thing? What about this Ethereum thing? It'll be like, hey, what about this database technology? What about this network? And ultimately, that's why I see kind of the etymology of Web3 and the consumer infrastructure stacking up. But we're really early. I mean, this thing just launched yesterday. So, and we've been talking about this with, people that or framework LPs and having conversations with them, like where are we in the cycle? It is still so early. It's like we're still at the email has to be done on a command line type experience. There aren't even email clients yet. Is kind of the analogy that I can give. So maybe that's just like a little perspective.
Yeah, I think that's right too. We can maybe drop a link in the show notes here to the smart wallet that Coinbase released. It's super cool. I did an interview with a guy, Will Robinson, on their engineering and product team back at ETH Denver this year, who works a lot with Jesse on Base and has really led the like engineering and product side of this smart wallet, which is super cool. So definitely go check it out. feels very safe and it's super usable as well. So
yeah, other shout out is Kane from Infinex using passkeys. It feels like this is going to become the new paradigm of how to interface securely with Web3, where you have some sort of biometric passkey that's tagged into your account with a username and password.
Have you used a passkey yet, Epo?
I actually haven't really, no. Which is bad.
Infinex was the first time I'd ever used it, and I was like, wait, is this like a password that's stored in my iCloud? This doesn't feel secure. It's not. It's biometrically driven. You have asset recovery. You have email recovery. It's pretty interesting.
So it's Face ID on an iPhone, or it's Touch ID on a Mac computer, or you can switch between the two.
Wait a second. Maybe I do use that then. I think for Coinbase, they put me, they tried to make it default a little while ago. I think I've got that set up for Coinbase. By the way, someone pointed this out at a dinner that I was at the other week. So do you guys use, I'm assuming like 2FA, do you use the Google Authenticator for a bunch of stuff? Yeah. So dude, it saves that to the cloud. The automatic setting is that it just syncs that into the cloud. And I know that I was at for Memorial Day weekend, I was with a buddy and we were like tubing down the Hudson, like in one of those tubes with like beers and whatnot. He had his phone and it fell into the river and he was freaking out because he was like, my authenticator is on that phone. I haven't like backed it up anywhere. And he just bought a new phone and like all of his 2FA was set up on his new phone. It's like, wait a second.
And that's you can turn that setting off, by the way.
Yeah, you can. But yeah. So this is more of a PSA. If that setting is turned on.
The other nice one is in that application is export, where you can export all of them to a new phone, and so you can have a backup.
Nice. All right.
Lost my 2FA codes forever. Oh man. Like no more coins for you.
Yeah. Yeah, that'd be a bit of a bummer. Well, I think that's basically. Oh yeah.
The only other thing I would say is that TradFi and the like are starting to throw out their targets. We got VanEck at 134K full case for ETH by 2030. It's like it feels like the crypto native price targets are like we're trying to get to 100K Bitcoin.
Yeah.
Standard Charter
TradFi is like, this is going to 500,000 in 12 months. Up your targets.
I think Standard Chartered had Bitcoin at 100 by the election.
I mean, you just look at like the cryptic bullshit that Suzu was posting last cycle. Like, you need to literally be 2x from your prior cycle high for it to like people start to get that bullish. Like, you literally need to have your price target surpassed and multiplied for the paradigm shift type, bull posting to start.
I don't know how much you guys knew. I have a theory about Suzu as well, by the way, which is I don't know how well you guys knew him. I didn't know him at all, but he I went back and I listened to these old Up Only episodes because I think it's instructive to be like, how nuts did people really get? And I listened to this one in May, and in May, remember May was when Elon sold his Bitcoin and China banned Bitcoin, and we had that
May 21, you mean?
May of 21, yeah. When there was that huge dump, and Suzu had two takeaways. He was like depressed, like this is the end of the bull market, and he also simultaneously called that dog coins were a new asset class, which I think he was ahead of his time on. But I think after that, remember the market recovered, and he was like, you know what, it's not over. And that's when he went all in on the leverage, which is the rookie mistake that you can't do. But I think he was actually right. I think his initial instincts were right, but then he, the hubris got the better of him there right at the end. But
I mean, the larger takeaway is that we are at the prior cycle high, and if you literally just stayed in the game, you'd be fine.
Yeah, the other takeaways are it is hard to make trades and have them go in the right direction. It is 10 times harder to make late cycle trades and have them go in the direction that you want them to. So sometimes it's okay to take money off the table. Nobody ever lost money taking profits, but it gets 10 times harder and 10 times more dangerous with leverage, and doing it at, you know, the last inning or two of a cycle is pretty risky. And, you know, yeah, I mean, just thinking about some of the stuff that happened in 2021, we were looking back at this. Avalanche got to 104 billion.
Yeah.
Do you remember that?
Yeah.
Like, if we think about where we are just in terms of aggregate numbers or excitement or exuberance, like,
Not even close.
just so far off.
Well, also, so this episode that I listened to, they were talking about Axie. And honestly, I never played Axie. I never, you know.
I didn't know you could play it.
I guess you've never been to the Philippines, but they love that shit. And there was like, you raised your different little animal and that allowed you to get another type of animal. And, you know, I remember listening to these guys talking about these different types of animals being like, man, this is such good alpha. So these guys are such giga brains. And that's not what was happening at all. These guys were monkeys throwing darts at a wall and it was working. So just remember not to get confused about that, because that's definitely going to happen again.
Well, I think, you know, one thing that is also true, having seen this is, you know, if we call this a cycle, I don't know if it's really going to be the same cycle cadence as we've seen so far, but this is the fourth time that Vance and I have been in the show, and it every single time gets a little bit more intelligent and a little bit more refined and frankly a little bit more subdued. Yeah. And that's actually a good thing.
There's some truth to that.
And so I think, you know, we're not going to see monkeys throwing darts at the wall as much as we saw last time, but there's going to be some wonky things, yes. But I think, you know, things like the institutionalization is going to bring a just totally different veneer to this cycle.
I think you're right. I mean, the Bitcoin and the ETF are seismic changes that just were not here last time. And
right.
Yeah. All right, fellas. I think we can call it here.
Also, I just want to put it out there. I can feel the bullish weekends coming. That was another 2021 feeling, when there would be these big bullish weekends, and then you'd see the Monday open. You'd be like, we're back. We're set.
What was the reason behind the weekends? Just low liquidity, people playing games?
This is like another Suzu thing where he had a bunch of takes on this, where he'd be like the weekend price action is like very indicative. Or he was like, there used to be a time where you could fade weekend price action, but now it's like very deterministic as to like where the future week goes. I think that is kind of true to some extent. Because like, you know, you see this thing go up on the weekends and literally no other markets are open. And maybe this changes once all stocks are 24/7 in the future. But like for right now, crypto has that monopoly. And when you have like the 1-2 punch of the ETF inflows, which you didn't have in 2021, where it's like the Monday open and it immediately gaps up on the CME, it's a hell of a cocktail.
I can see the FOMO. I can see the FOMO like hitting, especially if you're just sitting in Bitcoin ETFs, you're just watching a rip, and then what are you going to do on the Monday open?
Because like you look at stocks and like some of them gap up or down when they open on Mondays, you know, based on the prior weekend's action. Maybe that's a little prediction just thrown out there. When we start to see the first really bullish weekend followed through into the spot flows, that'll be a signal.
I think so too.
Maybe this weekend, we'll see. Leave it there.
Fingers crossed, baby. Knock on all the wood. All right. Cheers, fella.
Later.
Later.
Hey everyone, want to give a final shout out to this episode's title sponsor, Sei. Now, there are a whole bunch of really exciting reasons to be building on Sei V2 outside of just parallelization. I want you to head over to sei.io to looking into building on their public devnet. Again, click the link at the bottom of this episode and head over to sei.io to start building something today.